You would think that millionaires track all sorts of data and equations and have this complex arrangement of numbers that made them rich and keep them rich. But it's not true. Most millionaires only track these 5 numbers, and I want to share them with you today. That's right, no crazy spreadsheets or complex formulas. Just these 5 numbers are all you need to track. Because I believe you can become a millionaire despite all the lies that are out there. So make sure you're subscribed because they want you working forever. I want you completely free from this mess and ultimately to become wealthy. So the first number you should track is your fixed cost. Now these are things that come out every single month or semi-annually or annually or whatever the case is, but they are fixed. You got to pay them, right? Your rent, your bills, right? Your energy bill, cable bill, phone bill, all the bills like that. Your transportation costs to include your vehicle. Gas or electric, whatever it is, there's still a cost to charge it or fill it full of gas. You got insurance involved in that, health insurance. You have groceries. You have your debt payments that come out every single month. All of those need to be tracked along with smaller things like subscriptions. How much money is going to come out every single month that is fixed, and you're going to have to pay that bill regardless. You need to know that number. How do you know if you're actually making money or losing money every month? And is your spending under control if you can't even account for your fixed costs? So start right there with that. The second number you need to track is your savings. Now I know most of you guys out there know you have your emergency fund out there, 3 to 6 months worth, but you got to track it and you got to know exactly what that number is and exactly how much money is in there. The rich also know exactly how much they're saving towards their investments to go into investments later on. They also know things like college funds and other funds like that as well, retirement accounts, etc. They know exactly how much money they're saving to put into those various accounts. And think kind of beyond those savings lines. If you're wanting to buy a house, you need to be tracking the savings that you're doing for that down payment and the other costs associated with buying a house. Now, you guys know, I'm going to say, hopefully you're buying an investment property or buying a house that you can turn into an investment property, but nonetheless, you have to track that savings to get there. The third thing you have to track is your debt. Just like knowing exactly where their savings is and exactly how much money they have, the rich know exactly how much debt they have as well. And I'm not just talking about bad debt and good debt. They know about all of their debt, business debt, the whole nine. They know the rate, they know how much is out there, they know the payoff terms. They are actively paying attention to interest rates to see, is it prudent to refinance that debt if those rates fall, and it makes sense once you account for the fees and everything else. I'm always shocked, especially whenever we had rates, especially mortgage rates, were down under 3%, how many people didn't refinance because I don't know what the reason was, but regardless of what the fees were in order to do that, and trust me, there were so many people refinancing, I was able to find people that were refinancing all my debt for absolutely no fees at all. But that was simply because I was tracking every single debt that I had, and when it was prudent and it made sense, I absolutely refinanced all that debt. But you can't do that if you have no idea what's out there and you have no idea what the interest rate is or anything else like that. You'll just basically put it off until later, and now we're to later, and now you're refinancing at 5 or 6%, which is probably more than what a lot of your debts were back then. Track your debt so you don't find yourself in that same situation. The fourth thing to track is your long-term investments. Think your 401ks, your IRAs, your other retirement accounts. Think your brokerage account. Think about real estate investments. Those are all things that wealthy folks actively track. They know exactly what their balances are. They know exactly what the performance is of those particular assets, and they're actively looking to buy more of those assets all the time. This could extend even further into businesses, into all kinds of other investments that are out there, but make sure you're tracking them and you know exactly what they are doing, so that way you're on top of your investments and you're actively investing instead of being a passive participant. And the fifth number you need to track is your net worth, but with a big caveat. I'm not gonna lie to you guys. Most rich people know exactly what their net worth is, and it's an important metric in some measures. But I also know it can be easily manipulated. It can easily become more of a vanity metric than actually telling you how good you're doing as an investor or how good you're actually building towards wealth, because there can be some subjectivity in there at points in time in your life, or a lot of other things that can be kind of misleading. So if I'm being upfront and honest with you guys, this is one that I don't track, and it's for a very simple reason. And it is simply because I do not need emotions coming in and playing around with my investing, with my feelings towards investing, towards money, and a lot of other things like that, because everybody knows that's the number one killer of your investments is emotions. So for example here, my net worth went way up in 2021. So if I would have looked at it and really kind of got high on my own supply per se, I would have thought I was really great. I would have thought, man, I'm really going places. This is incredible. And then my net worth went way down in 2022 when everything kind of collapsed there in the stock market. So then you feel really bad and you're kind of questioning yourself and what you're doing. And maybe you should have gotten out earlier in 2021 because I would have been much better off than right now. And it creates a ton of doubt and really just bad feelings. And then it was way up again in 2023 and here at the beginning of 2024. And of course, that creates that good euphoric feeling again. Since I didn't look at any of that, I didn't feel depressed at all whenever prices were way down and stocks crashed way down in 2022. I was able to just focus on fundamentals and continue to snap up assets at depressed prices instead of actually being depressed like a lot of other folks were in 2022 because they saw that huge crater down in their net worth, which honestly kept them from buying Meta in the 80s, for example, which just a little bit more than a year later is trading from $80 to $450 plus. Or Nvidia, which was in the 100s, which is now worth over 600 in just over that year time frame as well. Instead of being depressed, I bought assets at depressed prices that made me a ton of money that added to my net worth in the end. But for me personally, I didn't look at my net worth either way because I didn't want feelings to enter into my investment. So that's kind of my caveat with checking your net worth and tracking your net worth. The good news is this channel is all about alternatives to financial freedom, getting rich or retiring early or whatever your financial goals are. It may be blacklisted by society, but they want you working forever. I want you to be completely free from this mess. So make sure you're subscribed so that way you're getting the truth about all this. So thanks for watching and I'll see you in the next video.